Yeah, hi, welcome. Let's take a look at the government's newfangled scheme, the Mortgage Guarantee Scheme, which is going to revolutionise the way brokers work in the next year and a half, because it runs out at the end of December 22, so it's not here forever. And the whole point behind this, and let's put a little title up for you then, is the government have want to encourage lenders to lend 95% mortgages. That's the whole point behind it. So let's call this the government. So we're talking about the UK government. By the way, that is the UK government's mortgage. There you go. Guarantee scheme. Guarantee scheme. For those of you who've been in the world of mortgages for long enough, like I have, you probably remember mortgage indemnity guarantees, which were all the rage, of course. They priced themselves out of the market, really, but they pretty much did what the government are doing. Now, the problem, of course, is that high loan-to-value lending is a key risk for lenders. Of course it is. You know, repossession occurs, property sells for less than it should do because it's a repo, mortgage balance goes up because of unpaid interest and charges. Invariably they sell and there's no equity to cover the mortgage, the lender makes a loss. Don't like that. So they have, for the last few years, since the crash pretty much, kept high loan to value lending very low. Yeah, they'll do it with gimmicks like guarantors or sureties or something like that, or, you know, sole proprietor joint mortgage, that sort of thing, getting your mum and dad involved. But the pure first-time buyer who wants to stand on their own 2 feet and buy a house, their first place, if you like, on their own or with their partner, with a very small deposit, has not been around for a long time, until now, or until April, when this scheme starts. And what it basically allows the first-time buyer to do is to buy a property with a 5% deposit. That's what it is. So if we look at this visually, because I want to give you a bit more detail on this really. If we look at this visually, so let me just sort of draw a picture here for you of my house. Here we go. Here's my house for you. It's a very tall house, because it is. There you go. There you go. There's my property, which we're going to be talking about as the live stream progresses. Now, this property, and I'm going to give you an example, is worth 200,000. So the valuation of this place is £200,000. There you go. So it's a typical first-time buyer property. Depends where you are in the UK, of course. Now, the whole point behind this is it allows you to borrow 190 grand or up to 190,000. So it lets you borrow at 95%. So put that in there for you. Now, 95% happens to be £190,000. Right, yeah. So the first-time buyer, therefore, only needs to get hold of a 10 grand deposit. Only, it's a lot of money, don't get me wrong, but there's equity release on Granny's property if you want to look at that area for you. Or there's obviously savings as well, which you can get hold of. But it's not impossible. My first place I bought back in the late 80s. I had a 5% deposit. I had to scratch around to find it, but I did. But I had to pay quite a hefty mortgage indemnity guarantee premium, because you don't need to worry about that because the government are paying this for you. So what the government are doing is they're going around to all the lenders and say, look, lender, do you want to be involved in this? And the lenders are saying, yes, please. And the lender has to buy the scheme from the government. They have to pay a commercial charge to the government for the guarantee. Now, that commercial charge, nobody knows what the figure is yet, but it will be passed on to the borrower either in a higher interest rate or a higher arrangement fee of some description. So it will be passed on. And effectively, it allows the lender to lend up to 95%. But the government, you see, guarantee the loan above 80%. So if we put in 80% here, excuse me, here you go. The government guarantee above 80% for this example is 160. There you go. So anything above 160 to the maximum 95% is guaranteed by the government. So that in my book is £30,000. So the government are providing a 15% government guarantee. And what that does, of course, is protects the lender quite considerably. And that's pretty much how the scheme works. Not a lot more to it than that. The lender is taking very little risk. There is a small extra risk, which I'll share with you in a second. So the lender effectively is lending up to 80% of the value of the property. So all the lender's in it for is 160. So the house price would have to come down quite a bit before it gets below 160 for the lender's going to make any loss. So they'll hopefully price this competitively, one would hope, to let the first time buyer buy it. So it's not going to be ridiculous costs. They do have to pay a bit more. There's obviously a commercial charge they pay to the government, and they'll pass that on as well. They do have to make a 5% contribution, effectively. 5% contribution of this. There you go. From the lender. So in a nutshell, what that means is if the lender had to claim on this, and I'll look at an example for you. Let's just say the lender repossesses this property down the line, and let's just say, let's get a different colour pen here, give you sort of different figures. Let's just say the property was sold at say 180. In other words, the house price, although it was valued at 200, because it was forcefully sold at repossession, it was flogged for £180,000. And the mortgage was still 190, say it hadn't gone down, then the lender would make a loss, as you can appreciate, of 10,000, 10k. They would therefore, of course, claim this loss against the government's guarantee. There you go. So they would claim the loss against the guarantee. Say, "Here, HMRC, Mr. Government, please give me that money," says the lender, and the lender will receive the cash. But they have to pay 5% of that. They have to put in 5% of that, which was that equal? 500 quid, I think it is, yeah. I think it's £500, isn't it? Just double check that, yeah. They'd have to pay £500. So it's a bit like an excess on an insurance policy. In fact, mortgage indemnity guarantee policies used to have a 20% excess. So, you know, it's not a big deal really. The lender will have to sort of fork out a bit of money for that as well. And that's pretty much how it works. Other than that, it's a fairly straightforward event. You, as a broker, you'll need to explain this to your client. A little picture, don't harm, does it? It shows how it all works. If you make it sort of visual and put in here that the government effectively are guaranteeing this, it's not a loan from the government. It's a loan from the building society or the bank or the lender. It's not a loan from the government like Help to Buy. This is a government guarantee, and they allow the lender to lend a much lower percentage effectively, or take that risk. Hopefully, therefore, the percentage interest rates that have been charged are going to be quite low. I think competition will keep it low anyway. All the lenders are signing up for this. Crikey, they'd be fools not to, wouldn't they? And some of the specialised lenders are going to as well for, you know, sort of adverse credit cases, those sort of things as well. Here's a little bit more detail for you. It's available for loans between 91 and 95% loan to value. So it's above the 90% but mark, really. What it will mean, as you can appreciate, is that the lenders will make all their loans look continuous and sort of very much the same. So their 90% lending will have the same sort of terms as their 95% lending. So they'll continue upwards as well. So you'll find a lot easier 90% lending, a lot lower rate 90% lending as well. But this is for 95% lending, or 91 to 95%. The lenders buy the guarantee from the government for a commercial charge. It is only for 7 years, but because the loans are only on repayment basis, hopefully after 7 years the mortgage debt has come down, being a repayment mortgage. So having a 7-year scheme is not a problem. So basically the guarantee only lasts 7 years. But a lot of first-time buyers tend to move on anyway, don't they, beyond that period. As I mentioned to you, it's repayment mortgages only, but most are done on repayment now anyway. First-time buyers don't do interest-only mortgages. It is for main residences only, which I think is a good thing. So landlords and second homers, you can't have one of these. So that's a good thing. You can't get 95% landlord mortgages anyway, buy to let, didn't work that way. It's a maximum property price of 600,000. So that's similar to the Help to Buy. And it stops in December 2022. So be prepared to have a sort of a cliff edge situation again in 2022. And other than that, that's about it really. I think it's a damn good thing. I really do. It's what we were missing. The government are very clever here because they know the house prices are rising beautifully at the moment and won't go down. So therefore they're not going to lose out really, because people's house prices will go up and repossessions, hopefully if the economy really bounces back, repossessions are going to be low anyway. So the government are getting a huge amount of great publicity for not a lot of cost actually. I think they're putting 4 billion aside for this. So it's not an awful lot of money at the end of the day. Very clever on the government's part, particularly so quickly. But they've modelled this on the 2013 mortgage indemnity or mortgage guarantee scheme that they used to have. So Brokers, be prepared to get very busy if this is your marketplace. But be prepared for the online dudes to get this as well. This is not for complicated mortgages. Repayment mortgage, it's not complicated. First time buyer, it's not complex. Hopefully the affordability will be quite easy. So the online dudes will get involved in this. You know, your Habitos and all those trusts and people like that will want to do this kind of lending and get some market share from this. So brokers, you have to work hard for this one. In fact, you're going to have to streamline your business, but that's a video that's coming up shortly next. Hope that's been useful. Bye.